On January 29th, three of the Magnificent Seven are all reporting their earnings: Tesla, Microsoft, and Meta. And all three of these companies are in slightly different situations. Tesla has seen their first annual decline in vehicle sales in the company's history. Microsoft stock in 2024 underperformed the rest of the Magnificent Seven despite them spending billions of dollars on AI infrastructure. And despite Meta growing their EPS numbers at a very fast clip in 2024, they still have one of the lowest valuations in the Mag 7. So in today's video, we're going to take a look at each of these three companies, what analysts are expecting them to announce in terms of their top and bottom line numbers, as well as a few things that I am personally going to be watching out for during each of their announcements. And of course, if you enjoy this video, make sure to drop a like down below. And while you're down there, leave a comment on which of these three companies do you think is going to have the best 2025. And as always, subscribe for more videos like this one. However, before we jump into the content, I want to make sure that I'm as transparent as possible with you guys about the positions that I hold, because I do own two of the companies that we are going to be talking about today. I don't hold one of them in the YouTube portfolio, but I do have a significant portion of Meta shares in my larger portfolio. Right now, the YouTube portfolio is currently sitting at a value of $58,800. It's up around almost 3% in the last month. And within this YouTube portfolio, I do have one share of Microsoft. You're looking at that and you're like, why do we even care about one share of Microsoft? That is fair. I have a significantly larger portion of my Microsoft in my larger portfolio. So that is closer to a $5,000 position overall. However, I purchased it a while ago, so it's actually gone up by around 100 to 200% since I have bought those shares. So right now that $4,000 position is sitting closer to $10,000 to $15,000 in overall value. So that's why I want to disclose with you guys, make sure that I'm transparent about the positions that I hold. Again, in this portfolio, we have Alibaba, Google, Apple, Microsoft, Palantir, PayPal, SoFi, Super Microcomputer, and Visa. On top of that, I hold two dividend ETFs in this portfolio, SCHD and VYM. I've talked about SCHD numerous times on the channel. At some point, I plan on selling out of this position, really when I need the cash. Right now, I have $15,000 in cash, so there's really no point in me selling out. I like the dividend that I'm getting from it, and overall, I'm still up around 15% on it. So right now, I really don't plan on selling out, but if we see a dip of 15 to maybe 20% in the market, I could easily see me deploying this 15,000 and then potentially even selling out of SCHD to try and pursue greater opportunities. And one of those opportunities could be a company that we're going to talk about here today, specifically Microsoft. But one company I don't plan on buying into, at least not at current price levels, and I've actually never owned before, is Tesla. Tesla in the last year is up 101%. And basically all of that run up in stock price comes after the election. We can see that from October 23rd on, the stock has ran up by 99%. The rest of the year, the stock basically just traded sideways. And we'll start to get an idea of if this run up is actually justified or not on January 29th when they announce their earnings. Right now, analysts have EPS estimates of 76 cents and revenue estimates of $27.12 billion. Going into this report, there is a little bit of a reason to be concerned if you are a Tesla shareholder. Obviously, the share price is trading at record levels right now, and that's despite the fact that on January 2nd, they announced that they had experienced the first ever drop in annual deliveries in the company's history. In 2023, Tesla reported a delivery number of 1.8 million vehicles. However, in 2024, they actually saw this number drop to 1.79 million vehicles. And this is actually a huge change from prior years. We can see that they have consistently been able to grow their delivery numbers by around 35 to 40%. They have had these one-off years where they were able to grow by 90% and even 140%. However, in 2024, they saw their deliveries decline by 1.1%. And there's likely two reasons for this decline. The first is just being general weakness in the economy. However, the second is a little bit more concerning. They are seeing a lot of competition come into the market. BYD companies, especially one of their big competitors in China. China was supposed to be the next frontier for Tesla and help them continue growing their numbers. However, BYD has shown that they are consistently outperforming Tesla in China. And obviously, China is just one of their few markets, but they are seeing competition across the board. You have Hyundai in Korea, and across Europe, BMW and Volkswagen are starting to compete very fiercely. Even in the US, you see General Motors, Ford, and Rivian trying to compete with Tesla. Tesla has a very strong foothold in the US, but in a lot of these other regions, they are struggling. And despite all of these concerns around the business for Tesla, investors are still willing to pay a premium for the stock. The forward PE ratio is currently sitting at 121.95, which is almost 3 times as high as where it sat a year ago. This may be a little bit of a controversial opinion, but I firmly believe that Tesla will underperform in 2025. I think the stock is trading at very high levels, and all of that really has to do with Elon Musk's involvement with the Trump campaign and the run-up that we have seen after Trump was elected. Obviously, I think there's benefits that could have on Tesla as a whole, but right now, all of that's really just been priced into the stock already. So even if we see those benefits, what is Tesla's stock going to do? It's just going to trade sideways from here, and they really need to work hard to expand their EPS and revenue numbers to actually justify this valuation. If I absolutely had to make a prediction around Tesla's stock and whether they are going to beat on their EPS and revenue numbers, I think that they could actually miss on EPS, especially because of this additional competition having to lower prices on their vehicles and potentially squeezing their margins. And I wouldn't be surprised if they also miss on revenue with them delivering less vehicles than previously expected and seeing lower delivery numbers overall. Microsoft, interestingly enough, is in a little bit of a different situation. The share price over the last year has only gone up by 7.5%. At one point, the stock was trading around $470 per share. However, since that point, it's actually down around 8%. Microsoft is another company set to announce their earnings on January 29th, and analysts have average EPS estimates of $3.13, with revenue coming in at $68.84 billion. The only thing that kind of worries me about Microsoft, and this is more of a short-term worry, is AI spending. Right now, they're planning to spend $80 billion in fiscal year 2025. That could obviously affect their bottom line in a major way, and we haven't really seen it pay off quite yet. There's a lot of companies that haven't really been able to monetize AI in a meaningful way. Some of the ones that have actually been able to see impacts from it are Amazon and the company that we're going to talk about next, which is Meta. However, Microsoft really hasn't yet seen the impact on their bottom line numbers from all this money they're spending in AI. And this additional spending doesn't worry me for their top line numbers. I think revenue is where they are going to see consistent growth. We have seen this over the years for Microsoft. They're a company that just consistently grows 10 to 15% on their top line. Right now, their trailing 12-month revenue is sitting at $254.2 billion. And obviously, if they come through with $68 billion of revenue this quarter, that would be a record quarter for the company. The additional AI spending would likely have a bigger impact on their bottom line numbers. And we're kind of seeing that over the last 3 quarters, because if we go back to the end of 2023, they were growing their bottom line by 33%. However, over the last 3 quarters, these numbers have fallen all the way down to 10%. And I think that could continue in this quarter. We could see lower growth on their bottom line because they are spending all of this additional money on CapEx. And right now, investors are pricing in a little bit more growth than high single digits for EPS. We can see that their forward PE ratio is currently sitting at 32.57. This is pretty typical for Microsoft. Over the years, they trade around that 30, maybe 27 to 35 kind of PE ratio. But right now, they are spending a ton of money on AI, and they haven't really seen that impact the bottom line yet. So investors are going to be paying attention to what Microsoft is anticipating in terms of actually monetizing AI into the future. Meta is a company that has done a little bit better job of actually monetizing AI. Over the last year, their stock price is up almost 60%. And this strong stock performance has a lot to do with their bottom line beats. They have been able to beat on EPS numbers anywhere from 7 to 14% over the last year. And in this upcoming earnings announcement, analysts are expecting $6.73 of EPS. I would not be surprised if they come through and beat that number as well. Revenue, they're expecting $46.3 $1.97 billion. And in terms of their top line numbers, Meta has just seen very consistent growth. They went through a time period in 2022 where a lot of people were pulling back on ad spend, and that did drive down their top line numbers slightly. They saw 5% declines on their top line. However, they've gotten back to growth. They're currently growing their top line by around 20%. But the bottom line is where they have seen extreme growth in terms of their numbers. They went through that time period in 2022 again where they were spending so much money on CapEx. They were focused on the metaverse and building out the Meta Quest headsets. However, they have shifted their focus more recently to growing their EPS. And this has had a huge impact on the stock price, and we can see that in their EPS numbers. At one point, they were growing EPS by almost 200% year over year. It's fallen off slightly, but they're still growing EPS numbers by almost 40%. And in terms of the Meg 7, Meta has one of the cheapest valuations. Its forward P ratio is currently sitting at 24.15. However, when you think about the Meg 7, what are the two companies that have the cheap valuations? It is Meta and it is Google. And that's because of the businesses that they actually work in. They are advertisers at the end of the day. And when the economy goes poorly, we see a lot of advertisers actually pull back on their spending. And that can have a huge effect on Meta and Google. And that's why investors are not willing to pay as much for these companies. And that's why for Meta, it's a little bit less about AI and more about the broader economy and what the companies throughout the earnings season are talking about. If a lot of companies are talking about reducing their spending, that overall would be very concerning for companies like Meta and Google. Out of these three companies, the one that I am paying closest attention to is Microsoft. They have spent tons of money on AI, and if they don't start getting a payback from it, I think investors could start to get worried and they may sell off the stock. And I'd love to see it drop down to around $375, maybe even into the low 300s. That would be a very exciting price to see for this company, because we've seen a similar thing happen with Meta, right? They spent all this money on the metaverse. It started impacting their EPS numbers, and because of that, the stock sold off in a significant way, despite the business still being very strong. And I think the same thing could happen for Microsoft with AI. And if that did happen, I would look to be a net buyer of shares, because I do think long-term Microsoft is going to be in a great position. They are going to be one of the leaders in AI. They aren't spending this money for nothing long-term, but in the short term, I do think that could worry investors. But that is all my opinion. Do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. If you enjoyed the video, drop a like down below. I really do appreciate it, and subscribe for more videos like this one. And as always, have a wonderful rest of your day. And for the joke of the day, what do you call a snapshot of the North Pole? Check the comments down below for the answer. Thanks for watching.